Hi, today is Friday, the 16th of January, 2009, and this is Brian Shannon from AlphaTrends.net. We just finished another week here, and for the day, the NASDAQ did finish with a gain of 32 cents, but the week was controlled by the sellers once again. Although it was somewhat encouraging the way that we saw the action unfold here the last 2 days. And by that I mean we saw the move below that widely watched level of support at 28.50. And typically, when an important level breaks, you want to pay very close attention for the possibility that it might lead to a much larger breakdown. But typically, if the market broke, let's say it did something like this, if we had seen lower highs coming into it and more repeated tests of support, it would have been a lot more concern. But the fact that we were down more than 10% before the break, 10% quick before that break lower, gave me reason for thinking yesterday that we wanted to be on alert for the potential of a trap below that level, which is what we had happen. So yesterday we saw the market rally up just below that declining 5-day moving average, and I was hoping that we would see a pullback in here today that created a higher low and held above the 28.50 level. We did see that as well. So now we've got two important levels to mark for trading early next week. We've got this low here at about $28.60, and of course we've got the low that we'd seen here. But actually 28.50 will continue to be 28.45 to 28.60 is going to be important, I think. Next week begins earnings season. Really, we're going to see a lot more companies reporting earnings, and of course we've got the change in administration. Speaking of that, here's a weekly chart of the S&P 500, and George Bush was inaugurated on January 18th, 2001. That week, the final week of his, or I'm sorry, the week closed for the S&P 500 at that point at 135.88. Today it closed at 85.06. So in 8 years, the S&P 500 has declined 37.5% under George Bush's watch, and on Tuesday we get a new administration. So we've got, Bush came in at the beginning of a bear market, and Obama's coming in here, at the end of a pretty spectacular, I shouldn't say that, after we've seen a spectacular decline. It's definitely, I don't think, the end of it, but clearly, it's going to be easier for him to paint to look back in 4 years, I think, to say, here's where the market was when I came into office, and maybe get, have a chance to gloat. We'll see. That's for 4 years down the road. Let's just keep taking it a couple days at a time. So back to the 10-minute time frame, we have in here now a pattern of higher highs, and we confirmed it today with this higher low right in here. We're back above the 5-day moving average, and we've got a little bit of resistance right up here, obviously at 29.5. We had broken this this downtrend here of the last few days. That downtrend did find support here twice, that they call that as live angle support. Now we can start maybe drawing a trend line off of here to see if maybe that finds a little bit further support. But, overall, we've got a very choppy market still. If they don't scare you out on the way down, they'll wear you out during this choppy action. But it obviously makes for some great trading opportunities, and that's going to be, obviously continue to be my focus, and that's probably why you tune in. Anyways, it's going to continue to be very interesting. Oil was down 32 cents today. Traded big volume again here today for the week. It's the biggest volume that the USO has ever traded. We're down close to the all-time lows. As I said, I was involved in it. I'm out now. It never got above that 5-day moving average in the 31.25 level that I was talking about yesterday. We still have a downward slope to the 5-day moving average. The rate of decline is diminishing, leads me to believe maybe we're running out of supply in here, but it's just not quite convincing yet. Probably above this 31, even above $31 a share, then maybe we can get a little bit of upward movement. It's still obviously in a severe downtrend, so any rally that I talk about in here is going to be only short-term oriented, and maybe good for a swing trade like this rally back here, but still be very distrustful of strength in all of these markets which are in downtrends. The financials were down 30 cents again here today. They're still holding above the November, I think it was November 20th. Is that the day that was? November 21st low. The intraday low, let's take a look at what, I don't even remember what were these. The closing low is 939 and the intraday low is 867. So we didn't quite close at a new low, but came down pretty close to that. The news is getting real bad, obviously, in here, and they usually don't release the bad news. It tops. Bad news comes out, near bottoms. I'm not calling this a bottom because we're obviously still in a very severe downtrend. We've got these, prior levels of support acting as resistance on the way up. So it's stair-stepping lower just in a, textbook fashion. But, we're seeing, again, a lower low in here today. And we did finish with a 3% loss in here today as well. So no signs of a bottom in the XLF. We're getting very extended to the downside. That doesn't mean it can't keep going lower, but, we've lost about 30% in here over the last, nine or 10 trading days. So, you got to be alert that if you're trading short in here, that you've got to, be quick with an exit strategy, I think, and keep it short-term oriented, especially as it gets more extended to the downside. The semiconductors were up 77 cents today. They got back above that 50-day moving average. Not that that's really such a big deal, but we did see some nice volume in here. And looking at a 30-minute time frame, we are. We same pattern. We've got the higher low in here and the higher high, and we can look at this as maybe we're getting up to some resistance in here and forming an inverted head and shoulders pattern. The height of this pattern here, if it breaks past it, we can come up with an approximate upside objective of $19 a share. So the semiconductors maybe some further upside in here, but I would wait for probably another higher low. Maybe we test that 5-day moving average here on this 10-minute time frame. Also, the double levered long fund for the semiconductors is the USD. So for instance, the USD was up the numbers didn't work very good today, and I'm going to post an article about that today. But the semiconductors were up 4.57%, and the USD was up 5.18. So these levered funds don't always work the way they're supposed to. But they're great trading vehicles. Here's where we've got some resistance, about 1775. So hopefully we can get a little bit of a pullback once again. Maybe we hold above the 5-day moving average. It would be nice to see, and then continued strength. It's obviously within the context of a larger downtrend, but something that might be worth a trade opportunity in there. The Russell 2000 was up 1.1% today. We had seen yesterday that the market came down, tested that $44 level. Let's just back that up to the hourly time frame so we can see there's that 44 level, and we also got back above here today, this level, which on a closing basis, which was basically about where we closed yesterday, right at that 46 level. Same thing in all these markets today. We saw that gap higher, a failure. It came down close to that 2-day VWAP. Later on in the afternoon, we were able to push back above it. It got really choppy in there, though. I wasn't trading this afternoon, but we do have a higher low in here. We've got a little bit of resistance up near 46.80 to 47 and a quarter, 47.10 or so. This downtrend line was broken. We saw that also in the NASDAQ, where this downtrend line finding some buyers in there. So maybe we can start to see a rally emerge if maybe we get a little rally, pull back to that trend line again as it continues to form, and then continue higher in here. It's the possibility that we get that little bit of a honeymoon period as people are talking about with Obama next week. Don't trade the news, trade it based on price reaction instead. You don't want to be making bets based on what's supposed to happen, because a lot of times, as we know, the market doesn't do what conventional wisdom expects it will do. The S&P 500 is probably the biggest reason for concern here. It was unable to recapture that 5-day moving average. It's also stuck below this prior level of support in here between basically 85.5 to 86. It's going to really have to clear that level, and I'd say on a closing basis, before we can have confidence that this might emerge into something bigger. Positively, though, we do have the higher low here on the 30-minute time frame, so this level at about 82.75 is going to continue to be important next week. And you can see in here that maybe we're forming this little head and shoulders in here too, inverted head and shoulders pattern right up to that 5-day moving average. So maybe we come up, test 86, pull back down again to 85, create a higher low, and then that 5-day moving average flattens out. Could be a good scenario that leads us higher if we take the height of this pattern, add it to the point where it would break out from. That will give us an upward objective near $90 a share. $90 a share seems like a reasonable place where you would expect to find some supply, but of course we're going to have all these other areas in the way as well. It's it's a trader's market. This level here will be important near about 83. Failure to hold that early next week, and then we could be in for just a continued breakdown here. It continues to be a very dangerous environment.